What if the blockchain platform that ends up securing billions of dollars from real-world finance is not yet the obvious one? What if the loudest narratives, NFTs, meme coins, hype tokens, are distracting us from the infrastructure quietly winning behind the scenes? What if the next major wave of institutional adoption flows into a network built not for speculation, but for execution, scale, and measurable utility? That network is Starknet. And after this video, you will never look at Ethereum scaling, Web3 infrastructure, or institutional adoption the same way again. We begin with where we are in 2025. Interest rates globally are still in flux. The US Federal Reserve is signaling rate cuts, while European central banks hint at liquidity returning. In Asia and the Middle East, capital hubs like Singapore and Dubai are reopening risk channels for digital assets. Institutions are no longer just flirting with crypto, they are now seeking infrastructure exposure, not merely trading exposure. Bitcoin and Ethereum ETFs are live. Capital is flowing from legacy finance into the architecture and execution layers of the crypto economy. This is not a hype wave. This is the early phase of a longer cycle, one that will decide which chains matter and which disappear. While many chase the next hot token, infrastructure is where the serious money is going. And while mainstream attention remains on Layer 1 giants like Ethereum or Solana, and Layer 2 rollups like Arbitrum and Optimism, something else is moving quietly. The next bend in the crypto roadmap is not only about Ethereum or Web3 gaming adoption. It is about scalable, trust-minimized networks that institutions can rely on. And this is where things take a turn. Here's the problem. Many Web3 gaming applications, NFT marketplaces, and DeFi apps still run on networks spawning massive traffic, high fees, unpredictable latency, and a burnt-out user experience. In 2025, average Ethereum gas fees still spike above $20 per transaction during peak hours. Unacceptable for enterprise operations. The old model general-purpose blockchains trying to serve everything struggles with scale. On top of that, institutional adoption demands predictability, liquidity, compliance, and data integrity. If you are an asset manager exploring tokenized real-world assets, stablecoins, cross-chain treasury settlement, or Web3 gaming with thousands of concurrent users, the existing infrastructure often fails. If the architecture cannot guarantee sub-second finality, low cost, and institutional-grade on-ramps, then the promise of blockchain infrastructure remains just promise. Now here's the part most people miss. While everyone talks about Ethereum 2025 and Web3 gaming adoption, the backbone that will power it is a network that can scale much further, secure real assets, and integrate seamlessly with legacy finance. The real story starts here. Enter Starknet, a ZK rollup built to overlay both Ethereum and beyond. Launched by the team at Starkware, Starknet uses ZK Stark proofs to bundle transactions off-chain while inheriting Ethereum's security. Unlike ZK Snarks, which require a trusted setup and face post-quantum vulnerabilities, ZK Starks are transparent and mathematically trustless, offering audit-grade, quantum-resistant validation that appeals to institutions. Starknet is positioning itself as more than just another Layer 2. It aims to become the execution layer that handles real-world assets, capital markets, stablecoins, and even Bitcoin liquidity in a trust-minimized way. One of the most important milestones this year was the integration of native USDC and cross-chain transfer protocol V2 on its network, opening regulated stablecoin on-ramps and cross-chain capital movements. In a strategic push into Bitcoin finance, Starknet rolled out staking for wrapped Bitcoin and launched an incentive program of 100 million STRK for BTC-centric DeFi flows. But here's where it gets interesting. Institutional custody and staking for STRK, the Starknet native token, is now offered by Anchorage Digital, giving real institutional trust to the network. The mission is clear. Build a network that can serve institutions, scale the Web3 economy, and carry real capital market workflows, not just hype narratives. Now let's zoom in on the architecture. It is not enough to claim scale, you must deliver it. Starknet leverages ZK Stark proofs to compress transactions. Thousands are bundled, verified, and checkpointed on Ethereum. The network introduced version 0.14, codenamed Grinta, which delivered distributed sequencing, a new fee market model, and notable throughput improvements. Starknet's roadmap shows it achieved Stage 1 ZK rollup status, meaning users no longer rely on a central operator for exits. But speed and architecture alone are not enough. Real-world utility demands fast finality, low cost, and composable smart contracts. Starknet's daily transactions are up, its stablecoin market cap is increasing, and usage shows early signs of revival. This kind of infrastructure opens doors for use cases like Web3 gaming adoption, tokenized real-world assets, cross-chain treasury transfers, and institutional-grade staking. What many fail to realize is that when architecture is built for institutional flows, not just retail volume, you get asymmetric upside. And this one detail changes everything. Let's turn to the smart money signals. Who is moving, building, and deploying on Starknet? First, Anchorage Digital's initiative, institutional custody and staking support for STRK. That matters because institutions cannot deploy capital without compliant custody and audit-grade frameworks. Second, the ecosystem launch of BTCFi. Starknet's drive to make Bitcoin productive within its wrapped BTC staking, tokenized yield strategies, and a dedicated incentive pool. Third, the staking surge. Stark staking rose around 23% in the third quarter of 2025, with 571 million tokens staked, and total value staked exceeding $1.3 billion. Approximately 13% of STRK's supply is scheduled to unlock by the first quarter of 2026, a factor investors should watch closely. Finally, the stablecoin flow and bridging expansion. Growing stablecoin volumes on Starknet show that liquidity is migrating. If you value deep research like this, subscribe to Crypto Wayfarer. These are not random headlines, they are structural shifts. Institutions are showing up. Liquidity is entering. The architecture is executing. And this is where the narrative turns from promise to reality. Of course, no investment is without risk, and truthfully, building infrastructure takes time. Let's be candid. STRK tokenomics carry their own complexity. Token unlocks, staking lockups, and competitive layering from other rollups remain significant. Competition is fierce. Scaling platforms like Arbitrum, Optimism, Polygon, and Layer 1 like Solana are advancing rapidly. Regulatory overhang persists. Institutional capital wants clarity, jurisdictional certainty, and audit-grade rails. The network must deliver compliance frameworks. Furthermore, while staking and on-chain metrics are improving, broad user adoption, especially retail and mass-market gaming, remains nascent on Starknet. The scaling narrative is real, but execution risk remains. This is not about blockchain infrastructure hype. It is about delivering institutional-grade, real-world utilities, and that takes time, discipline, and capital. Now here's the twist. The risk is real, yet the opportunity may be underpriced because many investors still chase flash narratives. Looking ahead, Starknet has several levers that could compound growth. 1. Continued rollout of Bitcoin staking and BTC-backed collateral across DeFi protocols embedding Bitcoin liquidity into its rollup. 2. Native USDC plus CCTP V2 integration. These bridges link regulated stablecoin rails with Starknet's architecture, enabling institutional treasury usage, enterprise payments, and cross-chain settlement. 3. App chain expansion via the SN Stack and third-party app chains projects building dedicated zones on Starknet with custom governance, settlement, and scaling. 4. Developer activity and ecosystem growth. Expect more DeFi, RWA platforms, gaming, NFTs, and infrastructure primitives built natively on Starknet. 5. Institutional staking and yield products expanding. When institutions allocate to staking platforms, networks benefit from organic security, liquidity, and human capital. If Starknet continues to hit these milestones and the macro environment remains supportive, it positions itself not just as a layer 2, but as a real infrastructure backbone for Web3, crypto finance, and tokenized assets. So what does this mean for you as a macro-aware investor in 2025? If you believe that the next wave of crypto is not just retail frenzy but institutional adoption, tokenized assets, stablecoin treasury flows, and scalable blockchain infrastructure, then the focus should be on networks that enable those flows. Starknet is unlikely to be a moonshot in the sense of a purely speculative token. It is a strategic bet on execution, architecture, and liquidity migration. Consider this. If tokenized real-world assets start running on-chain, if stablecoins migrate to regulated rails, if Bitcoin becomes an active part of DeFi, not just a store of value, then the question is, which network will handle the workload? Many will watch Ethereum, Solana, or Polygon. But the asymmetric upside lies with the under-the-radar execution layer that meets institutional requirements, and that is where Starknet rests. For long-term investors focused on architecture over hype, Starknet presents a compelling case. The market may still undervalue it because the visible narratives today focus on apps and tokens, not the plumbing. But when the plumbing matters most, architecture wins. And those who position ahead of that moment could capture meaningful asymmetric outcomes. In every cycle, when the noise fades and the plumbing remains, those who built for execution end up owning the system. Thank you for watching. If you enjoyed this deep dive into Starknet and want to stay ahead of the next infrastructure wave, subscribe to Crypto Wayfarer. Stay sharp, stay strategic, and keep wayfaring.